Hello, I'm David Mandy, president of O&M Partners. I want to welcome everyone to the Evergold Corp Town Hall webinar. Evergold trades on the TSX Venture under the symbol EVER. They also have an OTC listing, EVGUF, here in the States. For those of you that are new to these broadcasts, our mission is to bring the managements of public companies, non-deal investors together in real time. We're hoping that this information you receive today will provide context and give you and help you make a better informed investment decision. We want this broadcast to answer all of your questions. Questions can be easily answered by going to the question portal of GoToWebinar or by emailing us. For any of the questions that remain unanswered, we promise to follow up in a timely manner after the call. For those who dialed in with your phone, the only way you'll be able to hear our pre-recorded introductory presentation is on your computer speakers. If that's not possible, you'll be able to hear the main presentation after 8 minutes. So please stay tuned. Before we turn to our host, I'd like to introduce our special guest, Jeb Handwerker. Jeb is involved with Gold Stock Trades. He's an author, he's a speaker, and he's a founder of Gold Stock Trades. Studied engineering and mathematics. He has a master's degree. He's been investing in junior mining equities since the late 90s. He avoided the dot-com crash. And then in 2009, at the depth of the credit crisis, he began the Gold Stock Trades website. And it's a real pleasure to turn the call over to Jeb.
Well, thank you so much, O&M Partners, for having me here today. It's a really exciting time for the gold sector, and we've seen this past week a breakout in gold to all-time highs. This is new prices that we have never seen before, and for many months I highlighted that we were expecting this summer a major breakout in the precious metals, and we've seen a technical move, a breakout in gold, and a major breakout at $20 in silver, and we're seeing some major short covering. As we know, we've been following that there's been a lot of manipulation and shorts in the silver sector, in the silver space, and now those guys are beginning to cover, and the silver stocks have exploded higher, and we've been forecasting the silver breakout for a few weeks now. You got to be on top of things. Things are changing rapidly in the gold and silver space right now, and in the battery metal space as well. We just heard Elon Musk make a call for mining of the battery metal. So the junior miners are beginning to come back into favor now, especially with precious metals prices breaking out. Investors are looking for leverage in the form of a cheaper form of gold, either in the form of silver, which is also known as poor man's gold or middle class man's gold, and the junior miners, where you can buy millions and millions of ounces in the ground. Sometimes they're trading for less than $10 an ounce, or we're trading for less than $10 an ounce. Now that the gold price has moved, investors are realizing how undervalued these junior miners are with these huge reserves in mining friendly districts, and now they're beginning to catch on. One of the leaders by far in the junior mining space, leading investor by far right now, is Mr. Eric Sprott, who has led the charge by selling some of his position that he's had a huge win in Kirkland Lake in a gold producer, and using that money to invest in junior miners. And that's a theme that we all should learn from. That you see the super successful mining investors start rotating out of the producers into the junior explorers and what investors should be on the lookout for, especially if you're new to this sector. You got to start monitoring the companies that are raising cash and that are getting major financings, because the news goes where usually the companies are raising money. That means they're going to start hiring technical teams to get out in the field and start exploring and drilling. I believe over the next few months, we're going to hear more people, not just Mr. Sprott, buying and putting millions of dollars into these junior miners. So you got to follow the financings. You got to follow the people. The people is very important, and that's one of the benefits that I've had going through a 10-year bear market, going through a bull cycle, going through a bear market, now going back into the bull cycle. Having 20 years, you begin to see the track record of the geologists and the engineers, and that is so important when you're researching which projects have the founders advanced, which companies have the founders exited for their shareholders and had major $1 billion win or $2 billion win or $500 million win, and so that you can see the upside potential with the people. But there's still a lot of great deals out there that have been overlooked, or investors may have transferred to another situation, but there's still some really good technical information that's coming out of these stories, and they're still cheap. There's details and news that's very important to investors that sometimes get overlooked, and that's why it's important to subscribe to a newsletter or to start speaking to people that have, if you're new to the sector, learning the questions to ask. You come on to O&M, you hear the CEO, you give a phone call into the company, you do the basic due diligence, you hear an interview. That's so important. If you don't see the CEOs doing any interviews or transparency or communicating the story, it's very difficult to gain confidence with the companies. So that's why it's so important, to find the companies that are extremely active and with great management and that really hits a chord within you. I think that's really important, so that you have the conviction to stay the course. That is so important in this business. You have to have a portfolio of, at least for me in the junior miners, you have to be diversified, and you have to stay the course and be patient. It takes time for some of these companies to really, with exploration, to find, the mother lode, if they find it. And you have to be patient. You have to be diversified, meaning that if one company doesn't find it and they hit a duster, you're not wiped out. You want to stay in the game. You don't want to ever get wiped out in this business, and betting too much. Position sizing is crucial. Another thing that you should really pay attention to, is, find the people or start doing your own homework. And, when you see the top technical guys in a company buying stock in the open market, or you see the CEO buying, 100,000 worth of stock or 300, for these junior miners, that's time that you start paying attention. So you got to keep on top of the filings and going through compensation, that it's in line. You got to look at the shareholder roster. Who are they backed by? Is a major backing them? Like, for instance, if you see Barrick as a shareholder, or Sibanye Stillwater, or Lucas Lundin, or Eric Sprott, or Cisco, or Newmont, or Alamos, when you start seeing that gives a very strong third-party validation. And that kind of at least makes up for some investors sleep better at night, saying, hey, if Barrick thinks the stock is worth it, then that's that can help me sleep at night, especially when you're in the junior mining and it's a risky business. So really look for the shareholder support is so crucial. But I showed gold and silver compared to stocks. We're still a long way. We're still very, very undervalued. We still got a long way to go in this cycle. In real terms, gold hasn't really broken out. If you take inflation, gold's still below the peak of 2011 and far below 1980. So even though we've broken out into all new time highs, there's still a lot of room to go here. So start studying the junior miners, finding good people to speak to, good people who follow the money in the sector, follow the assets. And thank you, O&M, for having me here today.
Thank you, Jeb. Now we're going to turn to our host today, Kevin Keough. Kevin is the president, the chief executive officer, and director of Evergold. Kevin most recently served as chief executive officer of GT Gold Corp, which is advancing the significant saddle. It's a gold-rich copper porphyry discovery in the BC's Golden Triangle. Kevin began his career in Anglo American Corp. He worked for De Beers. He has 35 years of experience in the business. He's really covered all the areas. He has a technical background. He's got international experience. He's worked at the project level. He's public company manager, understands finance and capital markets, handles communications and business development. So it's a real pleasure to turn the call over to my friend Kevin Keough.
Well, thank you very much, David and O&M, for setting this up, and Jeb for those insights, which I thought were really pertinent and helpful. I'll just move some of my windows out of the view here. Today, I'm going to avoid the kind of dry stuff I've dealt with in the past. That is the corporate history and the people involved and the capital structure. I'm largely putting that aside today. And I'd like to focus, and the reason I am putting most of that aside, of course, is many of you are already familiar with the story. And if you want that information, you can certainly go to our website, which is evergoldcorp.ca. If you look under the investor side of it there, you will find several presentations, current ones that provide all of that kind of nitty-gritty. But right now, I wanted to focus today on what I think people are most interested in. As you know, this is our the key time of the year for us. This is when we're doing the work. This is when we hopefully add the value. There's been a lot of background effort gone into preparing for what we're unfolding right now. And what we are unfolding are two concurrent drill projects in northern British Columbia, both of which have the potential to deliver discoveries in the very near term. The drilling is underway on both, and the cover slide, which you can see there, don't be too frightened by it. That snow was sitting on our Snoball project, the Pyramid Peak target, at the beginning of this month. It's actually melted off considerably, but that's the kind of topography we're currently dealing with up at Snoball. That's an exciting project that we have underway right now. So I'm going to march you through both our key projects today. Just briefly on the forward-looking statements, I would say that nothing I'm going to tell you, of course, is guaranteed. And those of you who are not familiar with the sector really have to understand that. We can do a lot of work preparing these projects for first ever drilling, but it's no guarantee of success. We have a track record. The projects we think have considerable potential, but only the drills will really demonstrate what is or isn't there. So it's a high risk story, but those of you who know the sector realize the payoffs can be really significant with the discovery on these projects. So we as a company actually have 4 projects, 4 properties, all of them in British Columbia, but the flagships are identified on this particular slide here. I'm just going to move one thing out of the way. On the left of the image, you see the so-called golden triangle. And on the right of the image, you see a smaller ellipse highlighted with an orange ellipse there. That's the Toodoggin, so-called two doggone. We call it the Toodoggin. Now, what a lot of people are familiar with, of course, is Golden Triangle over there on the left, and our Snoball flagship is right in the center of it. A lot of people are less familiar with the Toodoggin area play over on the right. The key thing about it, and people are even less familiar with this, is that they're all in the same rocks. Both the Triangle and the Toodoggin are the same rocks, and recently we've begun referring to that kind of arch you see there on the slide as the Golden Horseshoe. So both our properties are located in the Golden Horseshoe of northwestern British Columbia, and that Golden Horseshoe is defined by the Stickeen terrain rocks. So these are the same age rocks deposited in a back arc basin maybe 180 to 210 million years ago, and we're in it with both our flagships. So starting in my next few slides, I'm going to deal just with Snoball, which is on the left there and not that far from a paved highway. This is a close-up of the Golden Triangle itself. Many of you may be familiar with some of the deposits to the south there. Bruce Jack, Skeena is busy redeveloping the old Eskay Creek deposit. There's a lot of exciting things, and up at the north end you see the GT Gold's saddle discovery. There's also another massive mine up there that's operated by New Crest. It's the Red Chris deposit. So it's a very rich part of the geology of British Columbia, and we're in the heart of it. Just to the right of Snoball, you can see paved highway 37. That's about 12 minutes from us. So moving on to slide 5 here. On the left of the image is a shot of our current camp. That's an old airstrip. It's called a barrage airstrip, no longer used, but we're set up right on it, the bottom part of that photo, and that's paved highway 37. Again, this is about a 10-12 minute flight, 10-12 kilometers actually, from the Snoball Pyramid Peak target. On the right, you can see one of our geologists on site who's been busy moving quite a lot of core lately. Moving to slide 6, that's just a shot of our camp. This is the kind of thing fly cabins that people sleep in. We also have core shack facilities that are a lot more spacious. These are actually flown in by helicopter, or in this case, dropped off by trucks, and provide comfortable accommodations. Moving on to slide 7. This is a view to the north of our key Snoball prospect. So the backstory on this particular target area, below that white dashed line across the middle, that area at lower elevations on the property was drilled by Noranda back in the early 90s. They were looking for another Eskay style deposit. The Snoball Pond, which you see on the lower right of the image, that's about 400 to 500 meters below our current drill site, which is actually on the top of Pyramid Peak. So if you go up slope there, you can see Pyramid Peak. That's over 2,000 meters elevation, and we're parked right on top of it and busy drilling right now. The key backstory here is simply that the work Noranda did way down here at lower elevations back in the early 90s proved that there was a large gold-silver anomaly. They also drilled quite a few high-grade gold-silver veins, none of which they could really make a mine of, but they never took their efforts upslope, and they let the property lapse. And so a number of years ago when we took it on, and we own fully 100% of this asset, when we took it on, we modeled the historical results, and we went up to the top. Well, our modeling of their results indicated that the anomaly was actually open upslope above that white dashed line. So we thought, that's a real opportunity. We went upslope and we sampled along the top of Snowball Ridge up there and all the way up and over Pyramid Peak. And we got really impressive results. And the long and short of it is that those results were so compelling that they led to our current drilling. So next, slide 8, is just kind of the same. It's very similar. It's in fact to the same scale as 7 there, more or less. That's the Pyramid Peak. And this gives you an idea what we think we're drilling up there. This is an intrusion-centered system. So all of those little crosses in pink circled by the big blue ellipse there, that's an intrusion which has come up into overlying sediments. Now this is very common in the Golden Triangle, where you have intrusions coming up into pre-existing sedimentary rocks, volcanic rocks, and a real mixed bag. But it's the intrusion that typically brings the goodies with it, i.e. the mineralization. So we've always believed that this target, Pyramid Peak, has the potential to deliver several styles of deposit. You can see them highlighted on that slide. It's got probably, well, we know from the historical sampling that it's got breccia, high-grade quartz carbonate breccia veins. It has potential bulk tonnage style as well. And so that model, intrusion centered, is similar to what we're drilling actually over in our Golden Lion property as well. Slide 9, though, is a close-up. Again, this is if you were a bird looking down. What you're looking down on there is simply the top of Pyramid Peak. It's about 250 meters across, circled by that blue ellipse. Those are our sample results, a combination of results from 2016 and 2017, which gave us a really compelling anomaly. The details are shown in the call out on the left, but basically that entire area is running considerable values of gold, an average of over 0.7 grams per ton gold, and a lot of silver too in the talus fines. Now, the median average there is almost half a gram as well. And to give you an idea, in our business, a 50 parts per billion, i.e. 550 parts per billion, is considered a pretty compelling gold in talus fines or soil anomaly. And the average here in this area for us is actually over 500 parts per billion gold. So this is the kind of tenor of anomaly that led us to the saddle discovery that GT has been advancing up north of us here. So a compelling target. Slide 10 is a full-on view of that target. Again, there's the blue ellipse circled, and we're drilling from that pad you can see at the top right now. An example of the mineralization on the right, that call out, the photo is very high grade, gold silver with a lot of arsenopyrite in it. That runs that particular sample between 400 and 500 grams per ton silver and upwards of 80 to 100 grams per ton gold. And that was found lying on the surface down here at the base of that image. So this is what we're drilling now. The drill plan, as is currently unfolding at Pyramid Peak, is pretty much as you see it there. Now, this will all change in the field. Typically, when you get into these projects, especially early stage exploration, where you really don't know what you're dealing with, you typically go hole to hole. So you'll come up with a concept, you will unfold that in the field, but chances are very high that you're going to change it as you go forward. So you pay a lot of attention to each hole. This is pretty much, I work at this 7 a.m. to midnight every day, really, truly 7 days a week, because you're monitoring every hole, every meter of every hole. And of course, you're doing a lot of this without the benefit of any assays in the early going. It's based largely on visuals combined with XRF evaluation of the core in the field. The assays come later. So this is our approach as we publicly announced some time ago, basically setting up on the apex drill pad up here at the top of the image and unfolding a series of holes in a kind of hub and spoke arrangement where you put a hole out at about a -50 degree. If that looks good, you go under it, -70. We've certainly been trying vertical holes here as well, as shown. That's a -90. The point of it is to quickly try to ascertain where the values in the talus fine are coming from, and you follow that with the drill going forward. So this is what's happening now. Slide 12 is just a shot. Again, these photos were taken at the beginning of the month. There's been additional melting since that time. The chopper is slinging drill pad material in the top left image. On the top right, you can see the pad up in the snowfields on top. There's the helicopter shown on the right lower, sitting on its helipad. We have to have a helipad up there as well. And the drill pad is below the helipad. So there's the drill on the lower left. I'll show you a few more shortly. Well, here's a photo. This is slide 13 that was taken a couple of weeks ago. So there's been additional melt, but that's the pad. It's not quite as hairy as it looks, but it is hairy. And I've traced for you with the blue line, the actual dip of that particular drill hole, which was drilling at about a -45, -50 degrees down to the southwest. These were literally, and that was literally our first hole. And so we've been busy unfolding subsequent holes since that time. And we're drilling out under what we see as the best of the geochemistry in the soils and talus fine. Here's another shot of the same drill pad taken from the helicopter, actually from a drone, this one. This is viewed to the southwest. It's quite foggy up there at times. It can be an issue getting drill core down, but the beauty of this situation, the beauty of this pad is, and this is a key advantage for us, although it is a challenge being up high on a peak like this, what you have to recognize is that if we get successful in the early going with the drilling, it means we're literally sitting very high up on the system. We're not sitting on flat land where you drill into something positive potentially, and it runs very deep into the soil, and you've got to start drilling hellishly deep holes to maybe follow it down. In our case, if we get successful on Pyramid Peak, we can actually just step down the side of the mountain with new drill pads and relatively short holes to keep hitting what we hope to uncover there, right? So that's a key advantage for us. We can go a long way down, 400, 500 meters with new setups and relatively short holes. And this could be true from a future mining perspective as well. You'd simply add it in from the side of the mountain. You wouldn't have to have any expensive vertical shafts or such like. Many of the old time miners did it that way, including here in BC. So that is really Snowball as it currently stands. I can't obviously tell you anything about the current project or the results that are currently unfolding there. That will all come out in the weeks ahead. We're waiting for assays. We're shipping more assays daily, and the truth will be in those assays. So it's an exciting time. I'm going to move you on now to our Golden Lion property. Again, that's it over on the right of that image. It is linked to the Golden Triangle by the Stikine Arch and the same rock. So just bear that in mind. You can see bottom left in that image a image of the province of BC and where we are located there as well. Here's a shot, slide 16, of Golden Lion and some of the other companies active in the area over there. Freeport is active, for example. Down at the lower image there, they're also active not that far south of us. Eric Sprott has just put a large amount of money into Benchmark. You see the lawyer's property there. That's about 23 kilometers south of us. They are busy drilling an exciting deposit. This area, by the way, has been known historically for its high-grade mines. The Baker, Shasta, these were high-grade mines. Further south, we've also got in the same rocks some very large bulk tonnage operations. You see Centerra down here with the Comess deposit, and Lorraine as well. So this is a hot area. There's a lot going on at the minute, and it is basically, you might think of it as the Golden Triangle East. Moving along to slide 17, this is a shot of our current camp at Golden Line. So it's a pretty nice little camp. It's a remote camp. This is much more remote than our Snoball camp. This is not 12 kilometers off the highway, but rather more like 23 kilometers, 25 kilometers from the nearest road access. But if we have success, I must tell you, historically, there was a drill, not a drill, but a bulldozer tracked onto this property. And the terrain at Golden Line is much more moderate than it is over at Snoball. So though more remote, it has certain advantages. And I would just switch back to slide 16 here. If you look back at that, you can see the road, the current road access, the red line, which takes you all the way up to Benchmark's current drilling operation, where I believe they have 4 or 5 drills going there right as we're speaking. Now, some of these photos are extremely recent. I had these taken for you just this morning. So this photo on slide 18, I see I've missed the big 18, but that is slide 18. This is our IP work, our IP crew rather, loading up for the day's work just this morning. Our approach at Golden Line, in a way, it's a more complex project than Snoball. At Golden Line, we've been unfolding IP. This is induced polarization, ground-based geophysics, as well as quite a bit of geochemistry, just to help us tee up our targets. We have drill-ready targets, but we wanted to complete the IP so we can make sure we're positioning the holes that we drill optimally. So all of this work's been ongoing for weeks now, but the drilling just got underway a couple of days ago, and I'll show you some photos of that. I'll come to those slides in a minute, but slide 19, just to give you an idea, that's the Golden Line property. It's about 10, 12 kilometers north-south, and we are focused on the southern part of that property with 3 key target areas, GL1, GL2, and GL3. I'll mention GL1. That is a historical area that Newmont, yes, big company Newmont, actually did some drilling on back in the early 80s, so a long time ago now, and these are the people who tracked a bulldozer up here and did the drilling. This attracted us originally. Newmont actually got bulk tonnage intercepts here in a porphyry, but at that time, the early 80s, mid 80s actually, it was 84, 85, the gold price was starting to really weaken off, and they walked away from it. But it attracted us back to this property, and we picked it up a number of years ago. Again, we own 100% of this property too. So when we got in there, we realized, and we started actually doing additional geochemistry nearby, and it uncovered these other target areas, GL2 and 3, which have emerged as really, really strong candidates for delivering a discovery. So I'll walk you through that one by one. This is a slide 20. This is a perspective view. I've added some 3-dimensionality to this so that it's easier for you to understand the lay of the land. GL1 is, and the historical area is what you see circled with the red dashed line. Now, Newmont's drilling are those dots, the red dots you see there at the GL1, what we call the GL1 main target area. So they got bulk tonnage style, 35, 40 meter true widths of over a gram of gold and quite a bit of silver. Up on the right, you see a few dots. Also, those dots, the red dots for the drill site, they got really high grades of silver up there, narrow intercepts, but numbers up to kilograms of gold. So quite impressive. We were attracted to this area. We are going to probably poke a few holes. In fact, we've started doing some of that into this particular target area on the main bench, just to get a sense, because they didn't finish the drilling there, and it may have a lot of additional potential just below where they were drilling. But last year, we developed on the left of GL1 there, up you see the GL1 North Ridge target on the left of the image. We developed that with geochemistry, and it gave us really strong results, which I'll show you in the next slide or two. A couple of the other areas, GL2 are at the top of the image over the ridge, and GL3 is over there to the right top image. I'll deal with those in a minute. This next slide, 21, is the GL1 North Ridge target. We're actually drilling this right now. Today, that hole is underway. It returned really strong grades of gold in genuine soils. They're noted there in the next to the purple dots. At 14,950 is actually almost 15 grams per ton of gold in soil, true soil. So that's a really strong, super strong number to pull out of a soil assay. And there are other good numbers there in the soils too. You see 1.1 grams, 232 ppb, 128. There's another over 3 grams. So that's a big target. This target is about 500 meters wide. It may be a high grade vein zone. We just don't know yet, but we'll be finding out pretty quickly. Slide 22 is actually a view of the exact target we're drilling now. And you can see top left of the image with the red arrow, that's actually our camp way down there. So we're really up quite high, but the topography is relatively moderate. And this is the drill active on that hole. This is, we call GL20004. So this is our 4th hole of the season on the Golden Ridge or Golden Line target area. That's the drilling's being done by Radius Drilling of Prince George, and we're currently drilling about a -50, -45, -50 hole. This will probably be a fairly long hole too. Going to pound it right through that ridge target and see what we get. 24 is another shot, the same drill, just from a different perspective. You can see the pads that we have to build up there. We take these pads down once we're sure we no longer need to use them. 25 is just another shot, the same drill. You can see the fellows at work, in this case, who were slinging in some of their drill rods, etc. And 26, again, the helicopter is above them and they're offloading drill rods. So now I'll move you to GL2. Again, the GL1 that I've just been talking with you about is over on the left. You can see the little arrow pointing to it. GL2 is over the ridge. This is a target area that's completely new to science. It has really strong surface geochemistry. Well, this is geochemistry in soils and in rocks. It's really a pretty impressive target area. It seems to be offering us a variety of styles. Now, these styles of mineralization, we've in many cases sampled in outcrop, and that's from a geology perspective ideal, right? You're not just dealing with soil gold anomalies or copper anomalies. When you can sample it in outcrop, that's pretty exciting too. Next best thing is really high geochemistry in soils. But we have a variety of styles exhibiting in this area, and I can tell you it's over this area that we've also been focusing much of our geophysics, which I'll show you in a minute. And the targets that we're going to be drilling here in the next few weeks are all being nailed down. The targeting of the individual drill holes is being determined with geophysics and geochemistry. I'll show you another photo or two in a minute, but just to summarize, slide 28, top part of the image, it's a little small, but we have multiple styles in the GL2 target area of mineralization. We've got, as you can see in some of the callouts, high-grade skarn. This is a copper, gold, silver skarn. We've got high-grade epithermal. at places such as the EP zone and the BG zone. We've also got high grade, I'm talking about high grade porphyry style bulk tonnage, copper, silver, gold. All of these are possibilities for discovery in our current program. And slide 28 shows you some of what we have actually sampled on surface there. And this is why we all get a little excited about, or a lot excited about it. Up top left is the skarn material. This is really high grade copper, gold, silver. It's actually, when I talk about skarn being high grade, typically skarns are rich in copper or a variety of elements, copper, gold, silver. This one you can see the values for in the box bottom right. That's over almost 14% copper. It's carrying quite a lot of gold, silver rather, over 120 grams, and it's got a nice smidgen of gold in it too. We're not sure that this is a true skarn yet, but we'll find out pretty soon. We'll be drilling it, and it looks to be developing into a very substantial geophysical anomaly with considerable dimensions. Top right, that's actually epithermal style quartz carbonate veining with a lot of silver in it. That's the middle text spots down there that you can see. It's got, that particular sample is over 3,000 grams of gold, mainly in the darker horizons you see there, which are sulfur salts and such, but it's got quite a bit of gold in it too, over 18 grams. So that's sitting on surface. It's a lovely target. And bottom left is some of what we call the porphyry style veining, really. It generally, in a bulk tonnage target, you get lower values, of course, but you get much, much larger volumes. And you can see some of those values bottom right for that particular sample. Over 2% copper, quite a bit of silver, and a very healthy amount of gold for a porphyry style target. All of this we have at GL2. Here, slide 30 is a view of the GL2 target area, and they just give you an idea of what we're unfolding presently with the geophysics. All of those green lines are lines of induced polarization that we've completed. In fact, there are more lines than this. We did a couple last year, and we're factoring those into the mix as well. But this is over that area that we were previously showing. Back up a bit. There's the geochemistry in slide 27, and here's the IP in slide 30. The red line down in the bottom, that's actually underway today. We've got some a target bottom right, which you can barely see. We annotate that as GL3. GL3, I'm not actually going to bother dealing with today, but it's a very crisp target that we'll be drilling. It's got very strong geochemistry, and we're putting IP right over this. It's extending to the southwest because we appear to have, with a little luck, a very substantial new target down there. It could be a bulk tonnage target as well. So the IP is giving us very strong results. Slide 31 kind of shows you a combination of some of the IP lines that we've run. Those are the starred lines, as well as the solid lines with a few hatches on them. All of those lines have been run to date. We did it over GL1. On GL2, which you can see there, those orange ellipses are simply areas that we identified from geochemistry as targets, and they're in the callouts there. But I can tell you that the drilling is going to encompass more than just those particular targets, because the IP is really giving us some substantially larger targets to play with there. Next, slide 32 is actually very similar to the previous slide, but it's showing you, pardon me, I'll back up. GL2 shows you sections, induced polarization sections. The strong colors of purple are where we're getting the highest chargeability. So basically the pump current into the ground, and we measure the kind of charge that's the residual charge there. You basically want to be where those high, strong purples are. And that, as you can see in the middle of slide 32, the chargeability trend, that's a very substantial target. It seems to be associated with strong polyelement surface geochemistry, copper, gold, silver, various other elements. That is going to be drilled without question. Up on the left there, you can see a couple of dashed lines. That's the skarn trend, and that trend is actually developed even further. That is where we're getting outcrop, high-grade outcrop, following the base of Claw Mountain, and that will be a very exciting target. We've also got high-grade porphyry. There's a fault you can see in purple, top of the image. That fault, we believe, is downfall to the big chunk of the ground to the east, and it's down on the toe of GL2, which we are getting very strong porphyry style as well. So there's a lot going on here, but the point from your perspective should be that we've got immediate drill targets that look very good, that have a high likelihood of delivering results. Slide 33 is actually a view of that GL2 ridge that I was talking about before. And the chargeability, I'll back up. This chargeability trend you see on slide 32 is pretty much as you see it on slide 33. It comes in from the left, goes across and up to the top of the ridge. Then there's a fault, and down there at the toe of GL2 ridge on the right side of the image, you can see an arrow. We're getting very strong porphyry style. That's going to be drilled. The chargeability trend is going to be drilled. And I might point out that left top of the image, you see the arrow pointing to the saddle on the ridge. Our GL1 North Ridge target, which is on the other side of that ridge where we're drilling, is actually possibly linked directly to this area on the right side here of the GL1 North Ridge there. So it looks exciting, and we're busy drilling it now. Slide 34 is a plan view, again, that's sort of just a little easier to grasp. On the left, extreme left, you can see the GL1 North Ridge target, which we're drilling now. And then there's a ridge trending north-south, and GL2 on the right. You can see the chargeability trend, some of the key target areas that we know about from outcrop, and all of the drill locations, the pad locations, are going to be nailed down. There are a few dots you can see and a few numbered possible pad locations there. 1, 2, for example, in the middle of the image, 3 top left, 4 top, and 5 over there on the right. Those are tentative drill locations. I can tell you there will be probably quite a few more holes than that. And these locations are all tentative. They'll be refined actually in the next day or so. So that's really an overview of GL1 and GL2, the drilling there. Slide 35 is just more of a curiosity for those of you who maybe don't appreciate what a bear can do. But that bear, obviously, this is an old claim post, and that's a metal claim tag that's been nailed there from many years ago. You can see the date on it. This was from the 2003-4 era. But a bear has obviously clawed that apart. So you don't want to really come into have an encounter with these fellows. They're grizzly bears and black bears up there. So just to encapsulate slide 36, this is well known. Our plan, phase 1 drilling on both Snowball and Golden Line has been about the same number of meters on both, about 2,400 meters in phase 1 drilling. And that would lead to phase 2 on both programs, subject to success. So phase 1 is unfolding. I can tell you at Snowball today, we're probably up to about 1,900 meters of drilling. It started, of course, well ahead of Golden Line, the drilling did. Golden Line, we're probably just up today to about 500 meters or so. I would say the drilling is some ways easier at Golden Line just because the topography is more moderate. Snowball, though, it's wonderful because we can almost all the drilling to date has been from the well, I can tell you all the drilling to date at Snoball has been from that peak, the Pyramid Peak apex pad, and it will remain there for the remainder of phase 1. And with luck, we're going to launch phase 2 on both of these properties going forward, and that'll be this season. Touch wood that we have the results that we hope to achieve. I'll just close out shortly here by mentioning a bit about the share structure. We are a new company, as many of you may know, just did our IPO late last year. We don't have a lot of shares out, about 32 million basic at the current time, fully diluted about 45 million. We're trading around 74 cents currently, and we have probably about 2.5 million cash, a little less than is indicated there currently. Insiders control a big chunk of the company. That's it, top right in the pie chart, about 26%. Retail is most of our involvement. Institutions, we've got, I might add, Sprott came in. This is not Eric Sprott personally, but this is one of the Sprott funds. Came in on our financing most recently in April, May there. We also have a couple of other well-known funds, well-regarded funds. And down below, I would point out, bottom right pie chart, that we actually, our float currently available to trade is only about 27 million because many of us insiders are locked up. There's still over 5 million shares locked up in escrow for insiders. So there's a shot, slide 38, of our crew. Or at least part of the crew, geophysical crew, Silver King helicopters. And that is really the story. This is a shot of our drill, again, back on Snoball, back on the Pyramid Peak pad, just taken a week or two ago at twilight. So we're really quite excited by what's going on, and I appreciate your interest in the story. I'd be happy to answer any questions that you may have now. Thank you.
Okay, Kevin, great presentation. We're going to turn to questions now. Let's start with Doug Loud. Doug, question today for Kevin. There he is.
Oh, there.
Doug.
Now I'm unmuted.
Yeah, we can hear you.
Pardon?
We can hear you.
Okay. Are Golden Lion and Snoball in separate companies so that one of them could be spun off to the shareholders or others?
No, Doug, at the current time, they're both in Evergold, and that's the way they will stay until we've hopefully proven some real value through discovery. It's just these days it's very difficult. There are a lot of challenges running these junior companies, right, in terms of
Indeed.
public companies. And my approach is really to have a very small number of assets, property assets, that I feel have the potential for discovery. You can't dilute your effort too much, or you just can't handle it. This is not Newmont. We don't have the infrastructure in terms of people. Almost everything gets done by contractors. And therefore, if you think you're going to be able to juggle 15 properties, you can't. But the plan with me and the way I like to do it is just to have 2-3 properties. We happen to 4, but like I say, only 2 are flagships. You channel all your resources into that tiny number of properties. You may recall with GT, we actually only had 1 property and delivered a huge discovery from that.
Right.
So if we really get successful on one, or maybe with luck both of these, then sure, at a future point in time, I think our model would call for selling the property, or selling the company rather, at a higher price, obviously. But right now our focus is just delivering discoveries. That's our focus for this summer.
I mean, it's really an interesting story. since you just got your money, do you still have enough money and permits for all the drilling you want to do?
Well, for phase one, yes. You know, the way it works with we did a prospectus offering last year, and for those listening who are not aware, it's not saying much, but ours was actually the largest IPO in the mining space in Canada last year. It was a bad year for mining IPOs. Now, you know, it's hot for gold and silver now, but ours was the largest, and we did it as, it wasn't a private placement into a shell. There have been a lot of those, and there have been a lot of other private placements last year, but not IPOs. There were 18 of them, and half those were for seeding capital pool companies. So ours was the most substantial at $3.5 million. We had to specify the use of those funds in the prospectus, and we specified we'd use the funds for our phase one drill programs on Snowball and on Golden Line, both. But that doesn't mean, of course, that we have all the money we're going to need for additional drilling going forward. The plan with and the approach with these small companies like this, it's basically a capital pool. You raise cash, you drill, with the hope that you're going to deliver a discovery, get the stock price up, deliver capital gains to your shareholders, but you know you're going to have to raise more money at higher prices, hopefully, and that's what we will have to do as well.
Okay, that's very helpful. Thank you. Very interesting project. Thanks a lot.
Thanks, Doug.
Thanks for your questions, Doug. We're going to turn to Heinz Thoma. Heinz, questions today for Kevin? Heinz is, you're unmuted, Heinz, I think.
He may have to unmute himself. Heinz, can you unmute yourself? There you go.
Can you hear me now?
You can hear me now, Heinz. Terrific.
Okay. Kevin, very interesting, much more exciting for us as well to listen than the first time you presented. So when you are drilling 1900 meters in Snowball, when do you think we're gonna see some results, assay results?
Well, I'm expecting assay results, and I would hope to have definitely hope to have our first release out in August. Heinz, I'm always a little reluctant to predict with any kind of certainty exactly when we're going to have the assays not only back, but also evaluated, you know, compiled. That there's quite a process that you have to go through. But the biggest unknown with the business of getting assays back is really the laboratories. They do make certain promises at the beginning of every season, sometimes during the season too, about how quickly they can turn things around, but usually they don't. Things change during the course of the season. They get overwhelmed. Or this year, I do know that some of the labs, including some of the big labs like ALS, for example, have had issues with personnel because of the virus. Mm-hmm. So, you know, and I can tell you, back in 2017, when we delivered the Saddle discovery, it was a nightmare trying to get assays back from them in a timely way because they were woefully understaffed at the time. They had kind of everybody had downstaffed for the during the recession in mining in the previous years. They fixed that in 2018, 2019, but now this year we have the virus, and I do know that's affected them. Some of our assays are going there. Some of our assays are going to another firm as well, where we think we might get faster response from them. So anyway, we're doing our best to expedite results. I think I mentioned our approach, because we think it's most representative, is always to batch results from several holes. We don't want to be unintentionally misleading. If we were to put out a hole, for example, that single hole, you know, let me say the market considers or the regulators consider anything material that which could either drive the stock up or drive it down. So to give you an example, if we put out a hole drilling a high-grade vein system that was a 0, it says 0. We put out a hole like that, people would be disappointed, the stock goes down. But you know, when you drill high-grade vein systems, you know the gold is nuggety, for example, and you know for every 10 holes you put into that vein system, 2 are probably going to be 0s, 2 might be boomers, and the rest are kind of middling. So you put out a 0, it's not representative. And if you put out a single hole, a boomer high grade, it's not representative either. You know, you only get that from mining it, really. So our approach always with these vein systems, like at Snoball, that we know from the outcrop we sampled, it's got high-grade vein systems there somewhere. Our approach is to put holes into them, you know, maybe 4 or 5 holes, 6, 7. We used to do 10 at Saddle, and then put them all out, and you've got a much more representative release. So that's what we're doing.
Thank you very much.
Thanks for your questions, Hein, as always. We're going to turn to Murray Vanderbilt. Murray, question today for Kevin.
Murray, you'll have to unmute yourself by clicking on the microphone icon. There you go.
You had it, Murray. You should be fine now.
Yeah, we're not hearing you, Murray. If you can't get connected, you can always chat your message in, but we'll circle back to you.
Thanks for the presentation.
Oh, there we go.
Okay, just drilling winds up what, early September, middle of September?
No, Murray, with luck in this neck of the woods, it can go significantly later than that. Generally, we think in terms of, let's say, the 10th to the middle of October. It all depends on the weather. That's what we typically get elsewhere there. And it can go actually into mid-November too. It just depends on, that depends partly on the topography. So, and of course, success. So yeah. We're not like some other companies out there that have properties, of course, in Mexico or elsewhere. We've avoided that. Some companies will try to, they'll try to have warm weather properties that will allow them to generate news year round. You know, of course, there's some advantages to that, but it's also expensive having that kind of operation in another company, or another country rather. And we've just chosen to go with your typical Canadian scene where you're focused for the summer, early fall months on doing the exciting work, and then there's a seasonal lag where you evaluate and get ready for the next one. You know, usually there's some cyclicity to the stock because of that as well, and that's no doubt going to be the case with us. So our focus now in the near term is simply delivering the discoveries. If they're significant, as you know, generally you get a pretty good lift on your share price. And again, our focus in the near term is delivering capital gains opportunities to our shareholders. Longer term, obviously, if we get stuck into a discovery or two of real merit, i.e. that could potentially become mines, then we would have other activities underway to kind of fill the gap as well off season. I might add though, I should add, we do have our other 2 properties, Spanish Mountain and our Holy Cross properties. They are both potentially drillable in the winter. They're further south. We don't talk about them much, not because they're not good assets. We actually have a gold zone at Spanish Mountain, Spanish Lake rather. We're just along strike from the Spanish Mountain gold deposit, which George Soros' old friend, Jim Rogers, owns a big chunk of Spanish mountain gold, and they've started to move lately because they have the potential for a very low cost but low grade open pittable thing there. We actually have the identical deposit style on our property as a zone which has got undefined upside and possibly considerable upside, which we picked up for virtually nothing in their last recession. And that is the reason we're not focused on it simply is because the grades are low. They're Spanish Mountain Gold style grades. And but I'm still rather strongly interested in that. And I can tell you we've had interest in that asset recently, and we're not going to let it go.
Thank you, Murray. We're going to turn to Stratos. Stratos, question today?
Again, Stratus, you might have to unmute yourself by clicking on the microphone icon. There you go.
Can you hear me now?
Yes, we can.
Okay, thank you. Yeah, could you please tell us about the cost of drilling, let's say per meter or per drill hole, taking into account that you have to transport people by helicopter, maybe equipment, and compare this with the other companies in the area?
Well, that's a good question. It's fair to say that drilling in northwestern BC in the mountain country, if it's accessed by helicopter only, is an expensive proposition. It's way higher than it might be, for example, in northwestern Ontario. But in northwestern British Columbia, if you ask what an all-in cost for a meter of drilling, like by all in, I mean, how much does it cost to build and operate the camp? How much does it cost for the helicopters, for the assaying, for the drilling directly, all of that material? It's easily $400, $430 a meter. That's a number we derived certainly back in 2017 at Saddle, and I've seen very similar numbers used elsewhere. Now, having said that, like a property like Snowball would be less because we're not doing geochemistry there or geophysics. We're just doing the drilling. And an all-in cost typically does also include some of the geophysics and geochemistry that we would typically use to help target the drills. So we don't need that. So maybe at Snowball, it'll be less. If you're asking like how much their drill costs are up at Bruce Jack or some of these much more established advanced operations, they'd be much lower, obviously, because they've actually built roads up there to access the site. And they're kind of drilling in known deposits where they get all kinds of efficiencies. But you might consider using the $400, $430 a meter as an all-in cost for virtually all of our peers up in that neck of the woods who are using helicopters only and have to build camps. And that would be similar probably for almost all of them. And
okay, and we are talking about diamond drilling.
Sorry?
We're talking about diamond drilling?
Yes, it's core drilling, that's right. And so, you know, and we're typically using HQ diameter core, 67 millimeters, or NQ, which is 47, 48. You can't use H if you're thinking we could use RC. Sometimes it's used, yes, and like especially they can use that, but it's typically not used on the exploration side like we're doing, mainly because it doesn't give you the kind of information you need to properly evaluate the deposit and to learn about the geology. And it's not that helpful for targeting. For example, it just gives you chips. And if you're trying to determine where a vein zone might be going or what the orientation of them are so you can target, it won't give you that kind of information. We actually used some RC, which was lower cost up at Saddle a few years ago, the Saddle discovery, when we were just trying to find it. We couldn't see anything. There was no outcrop, so we put a little RC drill on a track. We used a track drill which quickly moved around. And when we found the system, then we brought in a core drill and really started from that point on to drill with the core drill. So core drilling, it's vastly preferable, although it is higher cost.
Okay, thank you very much.
You're welcome.
Victor Zhao. Victor, do you have a question today? Also with muting.
Hello? Yeah.
We can hear you, Victor.
Yeah. So it looks like you have how many helicopters used currently?
Well,
what's the cost?
Victor, we use one helicopter at Snoball and one at Golden Line, and they're full on the program, and that can cost us $50,000 a week, generally, something like that. And so yes, we have 2 helicopters doing this. You really have no alternative to that. At the current time anyways, everything has to be moved in and out. We can't use fixed wing. There's no runway there, for example. That's just a reality. So again, with the exploration work we do, I mean, it is high cost, high risk, high payoff if you're lucky, and that's what we're aiming to deliver. So we know that our approach to exploration can work very successfully in a climate like the current one, where the market is hungry for discoveries and is responding very favorably to discoveries. Almost anything these days, you put out gold numbers, whether it's high grade, narrow, or low grade, long intercepts like Treaty or Tudor put out recently. It doesn't much matter. The market will take you higher. We do our best with the cost, but you can expect it to be expensive. Helicopters we can't get away from at the minute.
Okay, thank you.
Thank you, Victor. Scott, do we have any questions from the audience that you'd like to share with us?
Yes, we do, and a few of them have been asked and answered, but there's some nuances, so I'll try to go through them. There was a lot of questions about assay results, and I think it boils down to, are there any delays with the assay results that you can see at the moment?
Yeah, some of that I mentioned there before in our discussion about ALS and some of the issues they've had. A lot of the delays that occur with the labs come down to personnel issues. Either they're understaffed or, well, it's usually because they're understaffed, i.e. a couple of years ago, they hadn't staffed up after the depression or the recession in the mining industry. Back between 2011 and 2016 or 17. And right now it's more the virus situation. I personally don't know to what degree that's really affected them. I've just seen some signs that for one reason or another it has. And that's the kind of scuttlebutt in the business. So the only other area in which delays come up, sometimes labs, they can be disorganized. If they get a real surge of work, that's another reason for delay. At the beginning of the season, at the beginning of the summer in northern BC, they predict a certain volume of work coming in, but they may be wrong about that. There may be a big surge. There has been a surge lately. And then it kind of overwhelms their plans. So I usually count on some kind of delays for one reason or another. And that's probably going to be the case. It is already the case this season.
Great, thank you. Next question is, at what point this summer do you need to raise more money via share issuance? And how much would need to be raised for a second phase of drilling? And then 3 million question mark. So just wondering about that.
Yeah. Well, I'm forthright with people. Anybody who knows this business understands what the model is. We're not producers. We don't have any hope of near-term production. We're just a capital pool, and we're burning capital with one goal in mind. At the minute, that's to deliver a discovery, and of course, related to that, to deliver capital gains for our shareholders. So the way you see it done, ideally in the business, is you raise a certain amount of money, you use that money to unfold your objectives on the hope that whatever you discover or will end up with driving your share price higher. In our case, we raised enough money to unfold discoveries, we hope, with our phase 1 work. If we really have a strong response from the market for whatever we might deliver, then obviously we would raise more money at higher prices. That could be considerably higher prices, hopefully would be considerably higher prices. And generally the market doesn't mind that dilution. It's got to be done to further develop a project or a discovery requires an enormous amount of drilling and additional work. But the ideal way for good management to do it is to stage those financings off the back of success. If you ask how much money we need, let's say going forward later this summer, if we are successful with phase 1, you might assume that, let's say we want to unfold another phase 2 of similar scale. Well, it would obviously consume a similar amount of money to phase 1, which was really $2.5 million. So yes, 3 million up in that range is certainly not beyond the realm of possibility.
Thank you. And I know you touched on Eric Sprott and his involvement, his company involvement, and also that there were other institutional investors. This question is, are there any other larger institutional investors that you can reveal?
Well, it's common knowledge, for example, that Middlefield, went on our last financing, Middlefield, which is Dennis Da Silva. If you check around investors, Dennis Da Silva is very well known in the junior end of the business, running funds, fund manager, resource in Toronto. Middlefield's a really highly regarded group. They put money into us. Sprott Asset Management put money into us recently. That's Jason Mayer and those guys. And also Craig Porter with Backer Wealth. You know, Craig came out of Front Street, what was the name of the fund years ago? Frank Mershon, those guys, really well known. These three fellows are really probably the top junior resource fund focused on the really early stage in the business. And they put money into us. And we didn't have to shop for it. We just approached them and strategically placed a bit with them. And I would just mention, Scott, that yeah, some people are always after us. Well, has Eric himself put money in? Strategically, we decided not to go that route because when we first got out the door at 20 cents. The reason is there's a real cost to doing that. Typically, Eric and those guys want at least a couple $1 million of low-cost stock, and they usually want it at a price lower than you're already trading. And they end up with a very large block of low-cost stock, which you can't be guaranteed they're not going to let go out the door at some future point in time. That happened to us on GT with someone I won't mention, a very well-known name. So we avoided that this time. The objective was just to distribute the stock using an IPO, and we did do an IPO, which meant we were able to sell it very widely. We brought in hundreds of new shareholders versus just a small number that you might get out of a private placement of high net worth people. So we have a very widely distributed stock, which makes it less vulnerable to the kind of shenanigans you sometimes get from people who own very large blocks in a liquid company. So we do not have that potential downside. What we do have is a very broad shareholder base and certain key institutions like the ones I mentioned that have been carefully seeded with enough money, enough of a position that they'll be there hopefully for us going forward should we need to draw on them. And I would also mention we have one other European institutional investor. I won't mention the name, they haven't given me that permission. The other three have, but they've been with us right from the beginning. And we also have a very successful group out of Australia, Perth, Australia, who've done extremely well. I won't mention them either, but they are there for us too.
Thank you. Next question. Has snow cover over the UT vein pad played a role in the decision of keeping Snowball drilling at the Apex drill pad for phase 1?
No, snow cover hasn't had any issue on that at all. Again, our focus with the phase 1 work has been Pyramid Peak principally. The reason we stay there at the minute, obviously, is twofold. We have a vision that we want to unfold at Pyramid Peak. That pad, as you know, has been built to drill 360 degrees. So it's a pretty robust pad because we've not been sure where on Pyramid Peak the source of the anomalism is exactly, like what kind of deposit it may or may not be located in or where. So we've tried to, and the approach I like to adopt is to try to keep things simple. Pyramid Peak is a challenging spot, not for drilling, because once the drill is there, the guys can live up there for days on end if they have to, but moving the drill can be a challenge given the fog and the wind up there. So when you're in place and you're sitting on what you think might be the core of the system, the idea is to stay there as long as we think we should to really get a good handle on what's going on. And once we feel we've done all we can with that current pad up there, then we would move off it. But, you know, we obviously feel we have not done all we can from it. It's a big target that we're sitting on up there. But UT, to go back to UT, I very much like that target. It's a genuinely high grade apparent. It could be a vein system. It could be a vein or a vein system. We just don't know. It is high grade everywhere you sample it though, and we'll definitely get around to drilling that. And there could be more of the UT vein type system there as well. That's 1 kilometer away from the Pyramid Peak pad, and it presumably has something to do with the Pyramid Peak intrusive itself, i.e. it's an outlying vein associated with that intrusion somehow. We just don't understand the how yet.
Great, thank you. I want to make a quick note. Our special guest speaker, Jeb Handwerger, chatted in that he had a question to ask, but Jeb, I don't see you in order to call on you. If you're still on, please chat in your question and I will make sure to ask it. I'm going to move on to the other question I have. Is Evergold intending to remain exploring in British Columbia, or does it have any intent to consider expanding out of BC and into regions outside of the province where exploration costs are considerably lower, which would thus enable greater exploration volume undertakings to be realized?
The short answer is no. And the second thing I'd say is the question of exploration costs is kind of, I will go as far as to say it's almost irrelevant in this business, and your people have to understand that. Of course it's relevant in one way, but what I mean by it is the key driver of success in the junior early stage end of the business is not the cost of exploration. Yes, sure, you can do more if the overall costs are less, but the key driver for success is achieving results out of the ground that are really noteworthy. I mean, discovery. You can overcome all costs, regulatory and exploration, with success. And the reason BC and Northwestern BC is such a focus for us, that is some of the richest geological real estate on the planet. And we're right in the middle of it. And although it's expensive to drill, you know that your chances of success are also higher, maybe considerably higher than they could be elsewhere. And it's also, success in our business is not just about results out of the ground. It's also about being able to attract investor attention, of course, which is partly why I'm doing this today. There's a lot of awareness of that area, and you could have terrific discoveries maybe elsewhere, let's say up in the Northwest Territories in the middle. You could have terrific discoveries up there that would be very difficult to raise money on, simply because of where they are. So coming back to the question, yeah, we're not moving anytime soon from where we are, because we know that success will overcome all challenges, including the cost of doing this work.
Well, thank you. That's all the questions from the field. I did want to mention to Jeb or to anyone else, if you have a question, please email it to us and we will make sure to get it to Evergold and get answers back to you. They're very good about that, and we appreciate all the questions.
Yes, thank you very much.
Thanks very much. Kevin, just going to turn back to you for closing remarks, please.
Well, thanks, David. Yeah, I would like to thank everybody for participating, for showing the interest. I think we have a story that's really rather compelling. I must say, I felt really good when we set the company up and we got out the door at 20 cents, because I knew that and I'm really happy for the shareholders who supported us on the IPO. I think they've all done rather well by this point in time. I've always been open about there's a strategy for playing these junior pointy end of the business stocks. If you have a good gain on your hands, you should always take some off the table, because none of us can guarantee ultimately what's going to come out of the ground. And that continues to be the case with us here. Obviously, we're excited, and I'm really encouraged by what's going on in the field. We'll see what that delivers for us over the next few weeks. I think as a company, our capital structure is pretty much ideal, and we're good people, and we're doing good work. We just need some luck out of the ground, and there is a certain amount of luck involved in that. So it's the luck that could help you or hurt you. But just recognize that there's a lot of upside here in the very near term if we deliver anything of substance given the current market. So thank you very much for your interest and the questions, and I'd certainly be happy to answer any others you might have if you want to fire them in.
Thanks so much for presenting today, Kevin. I want to thank everyone for your attendance. Scott Edmonds for helping out in the back, make sure all the technology works. And I want to wish everyone a pleasant evening. We'll be following up with everyone, and we encourage you, please, to get your questions in. This is a really great time to be having introduced to Evergold, and we want to help you with if you require further information. Wish you all the best. Pleasant evening. Bye-bye.
Thank you.